In today's video, I want to introduce a new SuperTrend indicator on TradingView that gives the most accurate signals. Just make sure you watch this video until the end because I'm going to teach you a very profitable trading strategy based on this new SuperTrend. To add this amazing indicator to our chart, here we click on Indicators and search Standardized SuperTrend Oscillator. This one written by someone named Quanti Lux. Alright, this is the new SuperTrend. And instead of overlaying on the price chart like older versions, this one is added below the chart because it's an oscillator. As you can see, it's moving above and below the center line, which is 0. By transforming the original SuperTrend into an oscillator, this indicator offers both trend-following capabilities and mean reversion capabilities. This means it helps us with trends like the original version and also helps us identify potential reversals based on overbought and oversold conditions. As you can see, we have different components in this indicator, which I'll explain now, and after that, I'll teach you a very accurate trading strategy based on this indicator. So make sure you won't miss it. As you can see, we have candles here, Hinai candles, and this is actually a SuperTrend oscillator, a SuperTrend that is standardized and is shown like Heikin Ashi candles by default. Here in the settings of the indicator, you can change the style of the oscillator. If you set it on line, you will just have a smooth line, but when you set it on candles, you will have Heikin Ashi candles. This style is more suitable when you need more information. For example, when you want to know exactly when the momentum is changing. Consider you are using this indicator in a trend-following strategy and you want to enter in the pullbacks. So these candles help you to know when there is a pullback. When it's green, it means a pullback is probably forming, and it lets you know when the pullback is ended and you can enter a trade. Let's change the style of the SuperTrend oscillator to line because, for now, I'm just explaining the indicator, and this is a clearer view of the indicator. Alright, so this white line with green and red shadows is our SuperTrend oscillator. Like any other oscillator, when it crosses the center line, it can be a signal for a change in the trend. When it crosses below the center line, it's a signal of a downtrend, and when it crosses above the center line, it's a signal of an uptrend. But during the times that the market is flat, like here in this part, just like any other oscillators, we can have false centerline crossovers, or it can also happen in deep pullbacks. There is an option in the settings of the indicator, a Heikin Ashi source, which, when you turn it on, the SuperTrend oscillator becomes smoother and generates fewer false signals on the centerline crossovers. For example, for this part during this flat market, when I turn it on, you can see how it reduces the false signals. We keep this option on because by doing so, we will have a smoother oscillator line. Alright. As you can see, besides this white line, which is the SuperTrend oscillator, we have red lines and blue lines, which are SuperTrend of the SuperTrend oscillator. It's a kind of SuperTrend of a SuperTrend. If you don't need them and find them distracting, here in the settings of the indicator, you can turn off the SuperTrend of the oscillator. But we need it for our strategy here for Canarian signals. If we set it on both of the signals, buy and sell, we will have buy-sell signals based on the SuperTrend of our SuperTrend oscillator. When it becomes red, it's a sell signal, and when it becomes blue, it's a buy signal. These signals are faster than the centerline crossovers. I mean the centerline crossover of the oscillator line, and we need these signals in our strategy. We also have these yellow lines, which are reversion tracers. These are based on RSI and provide dynamic thresholds for overbought and oversold areas. Here in the settings of the indicator for reversion signals, if you turn on both overbought and oversold, the indicator will show overbought and oversold signals when the oscillator goes beyond these levels. I didn't find them very useful. We have better indicators for this purpose like RSI. So again, we go to the settings of the indicator and we turn off the reversion signals. Alright, now let me teach you a trading strategy based on this indicator. As you can see, some of these signals are very good and we have large movements in the price after them, but some others are not good, and we need to filter them. For this purpose, here we click on Indicators and search MACD, this one, Moving Average Convergence Divergence. We need to change the settings of the MACD indicator here. For the fast length, we set it at 100. For the slow length, we set it at 200. And for signal smoothing, we set it at 50. Then, here for the time frame, we set it on a higher time frame than our chart time frame. Right now, we are on a 1-hour time frame, so here we set it on 4-hour time frame. And then, here in the Style tab, we remove the MACD line and signal line. For the appearance of the histogram, we set it on the area. Everything is already set on the chart. Before we start the strategy, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get notifications of my new videos. Alright, This MACD with the special settings that we made shows us the overall trend of the market in a higher time frame. When it's green, the overall trend of the market is up, and when it's red, the overall trend of the market is down. So when the MACD histogram is green, we only take these buy signals. We don't care about these sell signals because the MACD histogram tells us that the overall trend of the market is up, and these sell signals are against the trend of the market. But these buy signals are in the same direction as the overall trend, and as you can see, all of them are profitable signals. But if you look at the sell signals, you can see that they were not good signals. On the other hand, when the MACD histogram is red, we only take sell signals because the MACD histogram is telling us that the overall trend is down. So we should only take the signals that are in the same direction with the direction of the overall trend. Please pay attention that this strategy is a trend-following strategy. And in times that a reversal is happening in the market, you may get bad signals like this, or especially when the market is not trending, you may encounter false signals. So you need to manage your risk properly. Thanks for watching, and remember to download the notes for this strategy to ensure you fully understand. You can download the notes from our Discord and Telegram channels, and I will leave a link below. Thanks again for watching, and see you next time.